maybe not even forgiven or relinquished, but the amount of debt that was on the property at the time that they took it back and sold it.
Is that taxable? Is that reportable?
The question is the 1099-A a reportable transaction? The information contained on the 1099-A can be very beneficial to us as practitioners because we can then work through the fact pattern and see if we have a reportable transaction that year, even though the lender has not sent a 1099-C yet. And so in that case, we can use that and use that to the benefit. Yes?
Is there a bright line test for what a rental property, when it becomes a rental property, and can that be rented to family?
There is a bright line test that I'll explain to you now. So the question is, if you have a property and you then convert it to a rental property, can you do that? That's the basis of the question. So that then you get the more favorable treatment. The dilemma that you face with this is that if somebody bought a home in 2006 and at the time they bought the home it was worth $300,000 and then it's declined in value down to $200,000 and you say, okay, I want to convert it to a rental property, the IRS code says that we actually have to take the rental, we have to take the conversion price and move it down to $200 at the date that you convert it to a rental. So usually that doesn't work if you do it the way that the code indicates that you have to do it. Any other questions?
Family. Can it be rented to family, or does it make any difference who it's rented to?
On our phone call, I would say it depends. His question is does it matter if the tenant is a family member? And I'll say it does not. It does not. The critical issue that you have there is the date it converted to the rental property. There are other tax implications to renting to a family member if you don't do it at a fair market value rent. But that's a separate issue. Yes. Yes?
Is the information that we get on the, going back to that
1099-A
the same as the 1099-C that we found?
It should contain some of the information that comes on the 1099-C. But it won't the 1099-A will have a little bit more information. And this is, in what we've seen so far, when working with the clients, when they look at these documents that they're getting from the lender, scrutinize the document and look at the different amounts that are being put in the form. What boxes are being checked, and from there to there's a possibility that those items might be disputed. And so they need to take the initiative to say, just because it came doesn't mean it's correct. Take a look at it and see if it's subject to any corrections and contact the lender. Good luck with that, right, and getting them to fix it. But if you think that it's wrong, you know, if I'm sitting down with a client and we can draw the facts together to help us to see where there's the errors, well, I'm not going to say that. Look at that, and then with the information, look for the opportunity that the lender has misreported that number, and it may be more favorable to the client to go with their facts in making a different reporting. Did I answer that question?
Yeah, I was just wondering, like a lawyer, discrepancy in that amount,
that is possible. So look at that, and if there's an error and your fact pattern can support a better conclusion, contact the lender and see and help them to get that changed. And then if not, your tax practitioner still has the ability to get that reported the way it should have been and to notify the IRS of the discrepancy, the error on the form. Any other questions? Yes. Oh, in the back and then in the front.
If $200,000 is owed to the second lender, and the second lender decides, instead of doing a short sale, to allow it to go through a trustee sale, are the tax consequences still the same to the seller?
So go one more time. So you're saying that
there's $200,000 owed to the second lender.
Okay.
And the seller's trying to do a short sale. And the second lender decides to let it go to a trustee sale instead? Are the tax consequences the same to the seller?
The answer to, so the question was, the question is if you've got a piece of property and there's a second lien on it, and they are going to let the property go to a trustee sale,
instead of a short sale.
Instead of a short sale. There's going to be a few more questions that come into play there, and that is on the second mortgage. At what point has the debt been forgiven? And that may be a question, is when the lender relinquishes that. And that may get back to questions about recourse versus non-recourse and in that area. But from a tax standpoint, there isn't a difference, but we get concerned as to when the date that the actual cancellation occurred. The question is, somebody's going into a short sale, they've worked it out with the first and the second, and as part of the workout, they've actually kept a certain part of that debt, and they're going to make payments on it over time. Then that piece wasn't forgiven, so that doesn't get counted towards the that won't be on their 1099-C. Okay. Any other questions? Back here and then up here.
What's the average time does the cancellation of debt occurs from the time that you close on a short sale?
Her question was, what's the average amount of time when a 1099 is issued? How long does it normally take? And on that one, we don't have an answer.
But I mean, what happens once you close on a short sale? They do have, release the mortgage through a cancellation of that, or what's the procedure after that?
Oh, okay. Well, okay. So she says, okay, just what's the procedure? What are the IRS's reporting requirements? So in the period that a cancellation of debt has occurred, they have to issue that to the taxpayer by January 15th of the following year to give them time to put it on their tax return.
Okay.
Does it always happen? No. Do they still send them after that? Yes. But if we read the rules and the guidelines, it says that they should have those out by January 15th. I mean January 31st.
Do they give a document to the county, Maricopa County? Does the lender do that, or after closing?
That would be a question outside of taxes. So her question was, does a document go to the county in part of that recording process? And I'm sure it does, but from a tax standpoint, no information would be communicated to the county for income tax purposes. Any other questions?
Does the 1099 go in both IRS and the state?
The 1099-C, that is a good question, and I believe the answer is yes. I know that it goes to the federal. Any other questions? No? Okay. So you've got enough information now to be dangerous. To be very dangerous, right? So many of the questions that you asked today, I could have put it depends on there, and we could have delved deeper into the questions and looked at the tax ramifications. As realtors, you already have enough liability that you cover just in your property transactions. The information that you're given is to help you to be a better advisor. And one thing that I've learned, in practice is that it is so crucial for us to surround ourselves with people that we trust, the people that we can use their expertise. And so I encourage you to do that. At our firm, for you, if you have any clients that need a consultation in my office, I'll charge you a flat $100 for the consultation. The consultation, should be within an hour, but I'll give you that flat first consultation, and then after that, we'll talk about what the engagement would look like for me to help your clients with that. If you call my office, you're going to be able to talk directly with me, and that's something that's not common. And I've got cards that are up here on the table, and I'll put some more up. So when you call my office, you're going to be able to talk directly with me. Your appointment is going to be directly with me. I have great partners. I have 2 partners, and we have 5 other staff members in our firm. So even if you had a chance to meet with one of my partners, they're very capable. But when you call and you ask for me and you want an appointment, they're going to put the appointment on my calendar, and we'll take care of you. Keep in mind, that October 15th is a big tax filing time for us. So if you call me and you call my office and want to set up an appointment, they're going to ask you, is it okay if we schedule this outside the 15th? If it's an emergency and you feel like you need to get in, we'll work it in. But I just want to let you know of my schedule, at least as it currently stands. So I don't know if you guys can tell, but I love talking about this stuff. I'm passionate about it, and I like it. And there's so many ways that we can help clients. And when you see somebody who's worried and stressed and under all that, get them into somebody right away and help and see if we can't take that fear off their shoulders and let them worry about something else other than this. So I really appreciate your time. You've been really great, so thank you.
Thank you.